Welcome to Beyond the Document, the podcast from FormPipe, where we discuss everything that is output, document and customer communication management. Today, I'm delighted to be in Brixton, South London, to meet with Rupert Bull from the Disruption House to discuss all things DORA. So welcome to the podcast.
Thanks very much, Ben. Delighted to be here.
Well, thanks for the invite down as well. It's great to be here in person. Now, although most people listening to this episode will have been working within DORA for some time and have an understanding, the fact that the regulation becomes applicable on the 17th of January, so not too far away now, I think it's worth just having 2 minutes on a high level talking about what DORA is and who it actually affects.
Thanks. So DORA stands for the Digital Operational Resiliency Act. It is a piece of EU legislation that affects 22,000 regulated financial institutions across the European Union. It affects directly those institutions that are regulated, but it affects indirectly all the digital suppliers to those regulations because, those regulations affect those firms. Because basically the obligation on a financial institution is to be operation resilient, yes, and it's related to the digital supply chain. And the regulation is very specific around a range of things that need to take place within that process. So part of it is actually about checking whether the supplier is resilient, has business continuity planning. You actually had to change the contracts in order to make sure that you could investigate, because actually historically the contracts were very differently structured. But what it really does, I think, that changes the dynamic for both suppliers and for regulated institutions is it requires ongoing monitoring. I think historically, when you went through procurement, you were one and done. And therefore, if you got through whatever the hurdle was to get through, you could kind of relax and you're always there. And what the Act requires now is oversight on a regular annual basis about third-party risks that sit within the supply chain. And it obliges the buyer to have a hot standby and a plan for exit if a supplier is not resilient. So therefore, there is now, probably in a way there was never before, a threat of being struck off from your buyer, which means that actually as a supplier, you need to make sure that you are not going to fall foul of accidentally underperforming.
And it's that supply chain which gives us the breadth of organisations that DORA is applicable to. Of course, if it was just financial institutions, it would be a much lower number.
Correct, exactly. And I think that no one knows entirely yet how many suppliers it will affect. I've heard the number 20,000. It almost feels like a perfect match. But I think broadly speaking, it affects a range of capabilities. So cyber is clearly one of them. Sure. But actually, it's really about incident management. So actually, are you tracking? How are you able to respond to an incident that if you have? And actually, what it also does is it puts obligations on the supplier to understand what are the risks in its own supply chain. And I think that fourth party risk is something that's not been there before, which means that you're no longer looking up to the buyer. You've got to look down to your suppliers as well.
More holistic in that view.
Correct.
Yeah. I mean, I've spent the majority of my career working within regulation and software within a regulated space. And I quite like this kind of period of time because there's always some trepidation before a new act or a new article is introduced to the market. But the interesting thing is, like a lot of other regulation, there are tangible benefits to be had and recognised by organisations by embracing it. Do you see that as well?
So I think it's, yes, I mean, in any sense, it's really about reliability and reputation. So I think that, I also think that people spend money where things are prioritized. And I think some of the things that are now prioritized under DORA have perhaps been less than exciting or less than, easy to get money for. And I think, if I look at the regulated institutions, over the last few years, they've been shrinking the size of their procurement departments because they've been trying to reduce the number of suppliers that they have, which probably came about because the big global consultancies said, we can save you money, right? You reduce the size of the supply chain. So then COVID happened. And of course, everybody had to become digital in a way that perhaps they weren't quite so digital before because that was the only way to operate.
So greater speed as well.
And greater speed. So suddenly you've seen massive benefits in terms of innovation, all digitally enabled. But probably without the oversight that was there. And therefore, some firms grew very, very fast through COVID because they delivered a solution that was necessary. But I think what that's created is a complexity that wasn't there before, and to some extent, concern about reliability and trust. So therefore, what DORA does in by being explicit about what's required, it gives a framework for what is expected of a supplier to an institution. And to some extent, therefore, that means, and we were just talking earlier before you joined about budget season, right? So when you're having budget season, which we're probably all in now, you're starting to look at, well, where do I have to spend money? And actually, if you have to spend money on business continuity and resiliency and things like that, you know you have to do that because actually now it's part of your sales process, right? You can't sell unless you are resilient. And it was really interesting because I was chatting to one of our banking prospects in Turkey, as it happens, and they said, it was a credit guy, he said actually he thinks that DORA is potentially a credit risk. And I said, really? He said, yes, because basically it's like an enhanced due diligence. So actually, if you're a supplier going into one of these 22,000 entities, you're effectively going to go through an enhanced due diligence you haven't been through before, because actually you've got to do so. So if you don't pass it, you're not going to get the upgrade sale. You might not get the renewal. You might not get your new business when you expected to get your new business, because actually suddenly the whole process takes 9 months, not 6 months. Yes. So that means you've got more capital consumption to get through the sales process. So suddenly I thought, that's really interesting, because actually if you're a vendor and you're selling to a bank, you don't want to put any friction in the way of a sale.
No, you don't.
You really don't, because he kind of like, targets on your head are going, okay, we need to make sure that we are removing any obstacle. And actually what DORA regulation does, it gives you early warning as to where you're going to go through that enhanced due diligence. So if you take the time to get ahead of it, and I think you mentioned that it's going live on the 17th of January, you've still got a couple of months to make sure that your ducks are in order, so that when you go through that enhanced due diligence, there are no surprises, which slows down your sales cycle. It makes it easier for your banker to go, oh, that's good, I don't need to worry about it. So I think it's really interesting because it removes uncertainty around certain things.
That's what I see. I'm looking at it a little bit internally here as well. I think the regulation can teach you a lot about your own organisation. In the same way that we're 27001 certified, that means that we are doing things in the right way day in, day out. And I've looked at the DORA regulation, and on the resilience part, why would you not want your own organisation to be resilient? And we went through the assessment with yourselves and we did really well. But of course, there were some great learnings that we took out of that exercise as well. So I presume we're not on our own in that way?
No, not at all. And I think obviously what we've built on in terms of producing our DORA assessment is the work we've been doing for a long time around business resiliency. So we met through Temenos, who are good friends to both of us. And so Temenos retained us a couple of years ago to start to provide a framework for understanding the capabilities on the Temenos Exchange members. And that was around operational resiliency, effectively, although they called it business resiliency in those days, and sustainability, which we can talk about later. But I think what we saw is that if you look at where DORA is and where we're approaching DORA from, there are two aspects to it. One is, are you not doing something the regulation requires, right? So effectively that throws off a red flag if you are doing something. So the first bit is actually, is there something where your capabilities are going to cause your buyer a real problem from a regulatory perspective? Second part is actually, how well are you doing it? Because there's two things. Are you doing it is one thing. How well are you doing it is another thing. And that really plays into the monitoring aspect of it, because actually, if you are doing it but not doing it very well and everyone else is doing it better, you will actually start to look like an increased risk to the buyer over time. Yes. So you need to actually understand, what can I do to improve? And it gives you guidance on how to improve. So that's actually building upon our long-term business resiliency assessments around technology, which is really what we're trying to do, is not just say, pass or fail, because it's not about that. It's actually about, how do you improve the quality of your execution in these areas so that you can be a genuinely leading firm, which is actually to be the best you can be. So we're very much not about pass fail. We're about actually help you to be the best you can be within the context of the marketplace, because you're always competing against other people, and the regulations.
Okay, there's two key points I take out of that, and I think they're both really interesting. So the first one is where you talk about the red flag. So if you do an assessment and you out of that, you identify a red flag, obviously for the supplier, that would then be a red flag, as you alluded to during the procurement stage, and would become a problem to you getting your revenue. So if we just explore that one first, and I'll come to the second one, in what way can Disruption House help an organisation if they identify the red flag?
So obviously it depends slightly what the red flag is.
What it is.
So it could be across a broad range of factors. I think what we highlight is this is a red flag and these are things that need to be done. Now, some things can be reasonably easy, quickly fixed. Yes. Other things might take longer. So if you actually haven't got your own contracts in place with your own suppliers down the line in order to give you the flexibility to influence them to get better if they're not, that will take some time, right? Yeah. So actually, if another thing is actually you're not using a particular cryptographic approach, which is quite easy to implement, then they're quick wins. So I think that the reality is that they are what they are.
Okay.
Some are faster to fix than others. But I think what we do is give you advice on what you need to do to fix it. We tell you sometimes it might be you haven't got the necessary documentation to support what it is, in which case it's about create the documentation, which is, given that the title of this is documents included in it, is probably a good thing to bring up.
It is for us, yeah.
But I think but what we've also done is we've also partnered with major consulting firms like Evelyn Partners, who are able to actually come in and support the change, right? So obviously some things might be bigger impact than others. And so what we really are doing with them is we're a diagnostic tool, which is to say, here's where you are, here's where you need to be. And sometimes you need to, phone a friend and get help, right? So we're not an implementation solution. We're a data business, but we're really trying to use the data to guide people and how to get better.
And with anything in business, but also in life, you're better off knowing about the problem so that you can go and do something about it rather than it just creep up on you.
Exactly.
Okay, the second thing that I picked up a few minutes ago from what you said is that ongoing monitoring. And of course, that's monitoring an ongoing risk as well. Now, I can see where a organisation can change and affect that risk, but I also see external factors happening here and how they may also then change as we go along. So let's touch upon that ongoing need to be monitoring and the best ways that an organisation can do that.
So I think, obviously there are things that are changing with your own organisation. So you will have a set of critical suppliers who help you do the things that you do. So,
we certainly do, yeah.
So therefore, I think if you're going to change one of those critical suppliers, then part of it is actually thinking about that whole process of engagement with the next supplier to make sure they are doing the thing. So some of it is monitoring the fact that you don't have a one and done procurement process anymore, and therefore you need to sort of change some of your working practices to make sure that you are following the principles that you are actually being held to when you go up into your own buyer. I think some of the other things are really where we help is if we give you advice to do something, you need to check back in and check that you've done it. And actually we can also, and with the way we've set up our framework, is for an annual reassessment. So I think, so in truth, it's kind of, here's the advice what to do. Now, some things, if they're a red flag, you want to fix immediately, right? So the way we've done this is to say, if you've had a red flag and you fixed it, tell us and we'll update the report, right? Yeah. So therefore, so in part, it means that the buyer is no longer worried that you have it because you've been through the process. And I think by showing that you've made a change quickly or you've implemented, it gives more confidence, right? It inspires confidence because the world is imperfect. We're all imperfect. But actually, if someone points out to you, this is something that you need to fix, and you go away and fix it and you demonstrate you've done so, then actually you've inspired more confidence in the buyer than if you kind of don't, right? So in very simple terms, communication's key. And I think, doing things and fixing things help you to, I suppose, both confidently internally, but actually also externally build trust faster. I think the other bit is that what we also do is give you a relative context to what you're doing. So one of the things we've always done is benchmark and provide a relative performance, not in any sense of trying to shame anybody, but to say actually the world doesn't stand still. Yeah. if everybody is getting better and you're not getting better, you're getting worse, right? Yeah. So therefore, actually, it's quite possible that the world is moving forward. Yes. And if you've missed that because you've had a really busy year, or you've just swapped a major supplier over, so you're focusing on something else, to know that actually the world's moved on, coming into next budget season gives you the justification to say, well, actually, guys, we need to do this because the world is different to what it was a year ago. And I think that's the bit where DORA really is focused on monitoring, because the world is not static.
Yeah, and that's exactly my point about, okay, you want to de-risk yourself in the eyes of the person procuring your software, but equally, I'll just go back to your own organization. You make a really valid point that you could just stand still, but then you're falling back behind potential competition as well. So having that cadence, let's say it's an annual one, to review and improve, regardless of which part of your business, but especially on the resilience, I think is critical.
And I think it actually, I mean, I haven't got an Apple Watch, I've got an old-fashioned watch, but actually a lot of people have Apple Watches, and they find it helpful to actually, to when to rest, are you sleeping well? So actually using data to live better is something that's become much more common in our daily lives, in the way that we think about, how many steps have you taken? My iPhone tells me every day, right? If I haven't done 10,000, it sort of nags me. But, actually those sort of things, we actually change our behavior in response to data. And we do it because we think it makes us fitter, healthier, live longer, whatever it is. A business is no different, right? But historically, that data hasn't been available. And I think what we've really been trying to do is to make that data available to help, as I said earlier, people be the best they can be.
Yeah, and it's funny with the 10,000 steps, that haunts me every day. So if that's the same kind of emotion that you have on a business side, I think that's a positive. And we're coming towards the end of the episode, and I don't want to conclude this without touching upon the other area of Disruption House expertise, and probably the way that I got to know yourselves, which is through the ESG part of your organisation. It's the area that I led within FormPipe as well, both for personal values, but then also because it's such a good barometer of a well-run company, in my opinion. I do see DORA also being a barometer of a well-run, well-organised organisation. So can you just touch upon what, very briefly probably, on what the Disruption House do within the field of ESG?
Yes, so we in the same way as we have developed an assessment and a framework questionnaire for DORA, we've had for a long time the same thing for sustainability. And as you pointed out, an overall sustainability capability is effectively a proxy for the culture of the business and actually how well run the business is, because it's actually more complicated to run a business on multiple themes than just one theme. And there's some very interesting research and data points now which show why it's important to have a sustainability capability within the business. So part of it is your buyers. So alongside DORA in January next year, CSRD goes live.
Yes, yeah.
And so therefore, for many financial institutions are also affected by having to report on the sustainability of their suppliers at the same time as the resiliency. Now, there is an overlap between sustainability and DORA, which is really around cyber and data privacy and things like that. So the things are not entirely separate, no. But they do have a link. And I think certainly buyer demand and being ready for it is one thing. And I think although the sanctions for DORA are harder than they are for ESG.
And they are hard.
And they're really hard. Let's not forget that. Actually, what's really interesting is it's not just about the supply chain. So we are seeing that banks are now starting to use ESG as a supplementary risk indicator when it comes around to allocating credit. Yeah. And in fact, we're working with one credit agency who are starting to look at including that in the credit reports that they provide to their banking partners. So I think what's happening through is increasingly access to clients and access to credit are both becoming linked to sustainability overall. And to some extent, if the buyer is demanding it and the supplier isn't working towards it, then actually in time what the banks feel is they will get fewer clients. And if they get fewer clients, they'll have less money. If they've got less money, there are worse credit risks. So it's actually two things. Rabobank studied 20,000 of their SME customers 3 years ago, and they found that those with a poor ESG score, all other risks being exactly the same, were twice as likely to be in arrears on their loan repayments as those with a good ESG score. And they concluded, having studied 20,000 of their customers, that the reason was those with a good ESG score or a better run business. So everything is kind of circular. So it's a framework that it's not sort of autocratic. It's saying, here are a range of things. There are trade-offs. You can't have a perfect score, because actually, some things will be a challenge, such as, if you're in America and your data center is on a coal-fired electricity grid, okay, you haven't got much choice apart from to use it, except to shut it down. And if you shut it down, you might put some people out of work, right? So there are compromises to be made, but I think it does make you think about the impact you're having on the planet and the people you employ and your clients. And I think what we do see is those with better sustainability have lower employee turnover. You've got lower employee turnover, you've probably got lower client turnover, which means actually you've got a more resilient business. So everything is kind of circular in some ways. And so what we do there is we provide, in the same approach, an assessment with recommendations on how to improve, the ability to monitor that progress, report on that progress, and your performance can be audited and assured by your accountant, for example. And what we're seeing next year when CSRD goes live is the EU is putting in place a framework for smaller businesses to report upon their sustainability, which is called VSME. And our platform will give you a VSME-aligned report, which you can then get assured or audited. And the EU assessed that for a business with 6.5 million euros of turnover, with 4 big buyers, asking them their own version of how sustainable are you, cost them 23,000 euros a year to reply to those ad hoc requests. So actually what we're seeing is, it's like ISO, it's like a standard. It can help you disclose, and then you're one and done. So I think what we're seeing is the world is moving towards this, and we're here to help people navigate that world.
Yeah. And I truly believe with what you said at the start. I think a company with a good ESG rating are a well-run company, and therefore it's an organisation that you want to partner with. And also, if you do get something negative flagged, if you then go and fix it, like you said at the start of this conversation, again, that's another positive, because none of us are perfect. But once you get told, that's your chance to act.
And I think, as you say, transparency around these things builds trust. And actually what we're really about, because we are in the B2B business here, right? And the B2B business, it's not like a consumer business where people hop and change a lot. You're building a long-term relationship, and anything that can accelerate the formation of trust, which honesty and integrity and those things do, means you actually do business better and faster. So I think that's what we subscribe to, and we help our clients and partners do the same thing.
And I've seen that in practice, so keep it going.
Fantastic. Thanks very much, Ben.
Yeah, thank you for joining me, Rupert. If you want to learn more about what the Disruption House do, it's probably best at the moment to visit Rupert's LinkedIn profile, which is Rupert Bull. And there you can see the latest updates around DORA or ESG coming out of the Disruption House. I've been Ben Saxton. Catch you next time on Beyond the Document.